Welcome to the Opportunity Zone channel. I'm Eleanor Curry, a commercial real estate broker and attorney. And for Opportunity Zones, there's huge buzz around it because the opportunity to not pay taxes on capital appreciation is a pretty big gain. But you want to understand the who, what, why, where, and how of it to see if it's a good fit for your investment portfolio. Hence our conversation, and really we're continuing the talk about how the IRS has provided guidelines to how it all works, right? So we talked for the past couple of weeks particularly about the guidance for business opportunity zones and making sure that you understand if your business investment qualifies for opportunity zone investment. It may be more complicated than just a straight line operating in an opportunity zone. They want to make sure that your income is really coming from that opportunity zone as well, because let's face it, the whole goal is that you're impacting these disadvantaged communities that have been designated as opportunity zones. So in continuing this conversation, we talked about the previous two safe harbors, which was total hours worked and total compensation paid. So we're going to talk about another one, and this one's a little more complicated. It's not a straight ratio. We're looking at the business management side and combining that with the property. So you're looking at two different components and seeing if you're meeting over a 50% test. So it's not a straight ratio, but you do want to make sure that there's a substantial impact for the management as well as the property that has a direct impact on the compensation, how the business is making money, how the business is being paid. So you're comparing and adding those two things together. Now for business management, you're really looking at where is the operations headquartered at? Is it in an opportunity zone? And that's not the straight 50%, right? Then you want to pair that with where is the tangible property, and that can include lease property. So perhaps you have a headquarters where your management staff is located, and you also have some important pieces of equipment, or you've purchased the tangible property or the real property that's in the opportunity zone that the business uses or operates with. So now you have a criteria when paired together that may qualify you when other things may not, such as hours worked or total compensation paid. So it gives you another way to take a look at your business to see, yes, we're operating in an opportunity zone, but really we're having an impact on this opportunity zone, an impact on this economic area, an impact on this vicinity. So they're wanting for you to take some initiative to really see if you qualify. And of course you want to make your case, looking at the management, looking at the property held, and seeing if you're meeting over 50% of tangible, real economic impact when it comes to your business operations. So that's the last and final one. Unfortunately, it's a little less firm than the first two, but certainly something that you can take a look at and really do your numbers to prove it up yourself. Talk to your compliance manager when you're talking about a fund and seeing how it all fits. So that is for business opportunity zone investments, a huge opportunity to really influx capital and investment dollars into businesses in these opportunity zones, which is an exciting possibility, especially when you look at the potential that these businesses have to grow in the next 10 years, and then ding, 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 you get capital appreciation to rent off. So pretty exciting, a little less firm, but certainly an opportunity when it comes to looking at the holistic idea of investing in a business opportunity zone opportunity. So that is today's guidance. We'll be continuing on every week, so make sure to like, share, and subscribe to our YouTube channel. And if you have any questions about opportunity zones, make sure to ask. It may be a topic on a future episode.